Joining me now is Sophie Karp. She's equity research analyst at KeyBanc. Sophie, it's good to have you. And how do these price hikes across the energy complex feed into the companies that you cover? How are they going to be dealing with them and or passing them along to consumers?
Hey, Kelly, thank you for having me. Yeah, it's a good question. It's unprecedented territory. The energy prices, like you pointed out, are at a multi-year highs. And, I frankly like both of my renewable names and my utility names here. And the renewable names are clearly getting more competitive. We know that they get more competitive on the relative basis when the energy markets are strong. That is because, renewable electricity gets more price competitive with fossil fuel generated electricity in this type of situations. So I think most of the names that I cover that have robust pipelines and are able to monetize these trends in the near term are well positioned. And the jumps in valuations that we are seeing are justified, especially considering that we're coming out from a pretty deep sell-off in the space in late 2021 and early 2022.
And let me just jump in there. I know that Nextera is one of your favorites. You just put it to overweight. But as you mentioned, the stock is down significantly since Jan 1. Why is that?
Yeah, I think that Nextera really got caught up in the trend of rotating out of growth names when inflation was the biggest fear, right? And rotating out of renewable energy trend. And I think that, frankly, is unjustified at this point. We think Nextera is one of the best stocks to own given the current backdrop. You're getting the benefit of both the stability of the regulated utility, which is roughly half of the company, and also the leverage to the strong energy market cycle via their renewables business. So given Nextera's renewables pipeline, they're actually positioned to take advantage of this strength near term. And on the utility side, right, you're getting one of the strongest domestic utilities with a multi-year rate plan in place and rate escalation linked to treasuries, which is a fairly unique feature, by the way, in the U.S.
Yeah.
And so, with oil prices being where they are, there's got to be a real fear of demand destruction eventually and some kind of recessionary environment building up eventually in the market. And being a utility where it's anchored in this stable environment I think is helpful. And so you basically get in the stable foundation of the utility growth and utility operation in Florida. And at the same time, you monetize in the upside in the energy markets.
Yeah.
It's large, it's liquid, it's clean, it's arguably one of the strongest management teams in the industry, and has been largely left out of the recent rally in the energy names. So I think it's unjustified, and I think the time is right to own the stock.
And it helps that natural gas in the U.S. has been relatively contained, even with the spikes that we're seeing elsewhere. Obviously, as we get into the summer, people have to pay for AC. If that price goes up, that could be a little bit more of a problem for them. But overall, would you say when people are looking to the utility space, which has performed well lately, that you think they should lean more towards those with a good renewable pipeline as opposed to those who are more reliant on, nat gas or traditional fossil fuels?
I think having a renewable pipeline and renewable mix helps. And I think the whole argument about fuel diversity and nuclear energy in the U.S. is going to regain momentum here because of this environment, right? To your point, nat gas has been more stable, but it is elevated versus historical levels. And this is where, again, Nextera FPL in Florida has close to 30% of their generation from renewables and nuclear. So I think that is also something to look out for sure, like what is in the energy mix.